Okay, I have these two questions, all right, for us to do together, all right, because we'll see what we have done earlier, whether we'll be able to translate that. Yeah. Okay, let's look at the question number one, or let's look question number two, like it's easier, right? This last transaction here. Right, question number two, we have Fieldstone Incorporation had the following transaction during the month of March, the first month of operation for the business. Right, the corporation issued 12,000 shares of capital stock to Sandy Fieldstone in exchange for 120,000 cash. Right, so now what would be the transaction? Anyone?
Sorry, could you please scroll up a little bit so at least we reread again? Okay, thank you.
I can say that the company issued 12,000 shares, and with the cost of each share $10 US. So now the company has 120,000 US cash, with the total 100 owner equity. The total owner equity 120,000.
Okay, so I will have put here capital stock, or I will just
capital stock 120,000.
And then you have cash of
cash. Cash we have 120,000.
All right, very good. Yeah. So that's how you record the transaction or the economic event. Yeah.
Okay. Second, purchase of.
Okay. The second one.
Purchase of 73,000 equipments, made 18,000 down payment, and sign a note payable for the balance. Okay. That means the tools and equipment should be 73,000.
Okay. 73,000. Okay. And then?
Yeah. And the payable should be, if we deduct 18,000.
We're going to open up a note payable.
Note payable, yeah.
Yep. And 73 minus 18, how much is that?
73 minus 3, it will be 65.
55. 55,000. 55.
55.
It's 55,000.
Okay, 55,000.
And
about
cash minus
cash will be deducted by 18,000.
Very good. So I just put here minus cash of
minus 18,000.
Yeah, I put it like that.
Okay, no problem. So made payment of 9,000 on the month owned for equipment. Now again, the cash should be deducted by 9,000 more.
Okay.
And also the note payable should be deducted by 9,000 more.
Again, you made payment on the amount owed for the equipment. So the equipment is so means that
55,000 should be also
minus 9,000.
Yeah, by 9,000. I guess now we are okay.
Okay.
With all the three transactions.
Yeah. All right. So this is how you actually you read the transaction, and then you try to digest what is happening and what are the accounts involved, and of course whether there's an increase or decrease in the respective accounts. Okay. Right. Thank you, Brother Hakimi. Very good. It shows that you have understood this topic very well. Good. Very good. Yeah. Okay, let's go for the first question. Okay,
Doctor,
now, yes?
Just one question. Just now you said it's own 9,000 for equipment, right?
Yeah.
Why you put not payable? Not.
Okay, this one you nampak ni, you equipment, right? You made 18,000 down payment, so cash 18,000. And then you sign a note payable for that. So the note payable that you sign is the 55,000.
Okay.
All right, and
so
then
9,000?
The 9,000.
The payment 9,000?
made payment. So the made payment, because now, remember just now you had to pay 55,000, but now you make payment of 9,000 first. So you have a balance lagi lah, 55 minus 9, you still have note payable. Then you have to pay.
Oh, I thought you increase in equipment.
Equipment.
You own another equipment.
No,
You minus cash, you own.
you minus cash because you make payment for the equipment.
Then you got another. I thought you got another equipment because you
No,
own.
no, because you this one. Because the word is the amount owed for equipment. Remember this now kat atas ni you buy equipment for 70,000 and you create a note payable of 55,000.
Yep.
Now the next one say that you made payment for the amount owed. But if you say they make payment 9,000 for a new equipment, then you have a new equipment lah. You add on equipment. Is that clear?
Okay.
All right, very good. So what do you call this? This is what we call statement of financial position. Right? So this is what we call boleh tak tengah je. Okay. Right, this is statement of financial position. So normally you will have a period lah. So normally you have to as at, let's say for example 31st of December. Is it 31st December? There's no month. As of 31st March. No year given. Yeah. All right. So this is how you do it. Okay, let's go. Okay, of course you have to have the totality at the bottom here. So what is the total here? We have asset 120 minus 18 minus 9 plus 73. So total here is 166,000. What about here? Total here is 55 minus 9 equals to 46,000. And here is 120 plus 120. We have 166,000. So now you have on the right side and the left side is the same figure. Okay. Happy? Okay. Let's look at the first one. Okay, because there are 6 transactions here, I will call each one of you. All right, just for each of the transaction here. Is that okay? All right. Let's give. We have 6 of you here. 1 to E, F sampai F. So let's have Hakim first because this one is the easiest one. Issued to many 5,000 shares of capital stock in exchange for investment of 200,000 cash. Hakim? Right? Okay, Hakim is not here. Maybe, I'm not sure.
I am here. I'm sorry. Issue to money 5,000 shares capital stock in exchange for his investment 200,000 cash. That means the cash should be increased by 200,000.
Okay.
Good.
Okay, then
Cash.
then you have your capital here. Is it?
Owner equity. Yeah. Capital should be again the same amount.
All right, very good. So that's the first transaction. Okay, let's have next Hani. No, brother Hani.
That's 2 million.
2 million?
Deduct 1 0 from.
Hold on.
No, you have
200
written.
cash. No, it's 200 cash.
You have no.
I have
This is
extra.
under the cash you have written.
Thank you.
Yeah, now it's okay.
All right. Okay, now can we have brother Hani for B? Purchase land and building for 410,000, paying 100,000 cash and signing a note payable for the balance. The land was considered to be worth 310,000 and the building 100,000.
Okay, so here they will have building, land and building purchase, which is 410 under assets.
Land. Okay, once you have that, because it mentioned that initially it says that land and building 410, but you have the last sentence that say that the land was 310, building 100,000. So you break up the account into two type accounts. One is the building and the other one is land. Right? And total is...
Can we combine can we combine them together or we can't?
No, if it's given as normally we divide that into two, because sometimes the value of the land increase, all right, in the future. So you are going to do a revaluation of the land, or you are going to do evaluation of the building. So it's a separate. So you're going to have two.
Separate. Oh, okay.
Yeah. So you have building of 100,000 and the land of 310,000. Okay, next.
Okay, so why do we have? I mean, why cannot divide them like accordingly, like the 410 divided on 2? Why would we put like the building is 100,000 and the land is a 310? Or doesn't matter? We can put any figure.
No, because it's stated here. It's clearly stated here.
Oh, okay. I didn't see. Sorry, I think it's like.
The land was 310 and the building is 100,000.
Oh, okay, got it.
Okay.
So and then paying the 100K, which is not account payable
Okay.
under liabilities,
You have a note payable. How much is your note payable?
is 100,000.
Sure. Are you sure? Again, read clearly. Read carefully. Paying 100,000 cash and signing note payable for the balance. So what
Okay,
happened?
I didn't. I would. Then that means in this case it's 310, right?
Yeah. So what is 310?
310 is the land. He hasn't paid for the land yet, which
No,
is not payable.
No, you don't read it like that. What you read is that you pay 100,000 cash. So what happened to your cash, and then the balance you sign a note payable. So what
Oh,
happened?
the cash will reduce. The cash will be reduced to 190.
And okay, you just put minus 100,000 first, right? Because
Okay.
you pay cash 100,000, and then the note payable. How much is the note payable?
Not payable will be 100,000 also.
No. It says that the note payable for the balance. How much is the balance? How much is the total
balance
land and
300.
building?
The total of the building is 410.
Okay, and then you pay 100,000 cash.
That's correct.
Then what's the
And then
balance?
the balance will be 310.
So 310 in the form of?
In the form of not payable.
Yes. 310 in the form of note payable. You get? Understand?
Yes, now I got it.
Ah.
It's a bit
So I
confusing. now,
noted
yeah.
that you are very you rush into you have to read carefully because the information is very important. All right, you have to read it clearly. Then don't rush into decision. Yeah. So read
Okay, sure.
the line clearly, right? So you say purchase land and building, pay 100,000 cash, balance in note payable, land 310,000, building 100,000, right? So you get the information correctly. Okay. The
Okay,
next
got
one,
it.
let's have Johan. Johan, are you here?
Yes.
Okay. Install special insulation and soundproof throughout most of the building at cost 120,000. Paid 32,000 cash, agreed to pay in balance in 60 days. Many consider this item to be additional cost of the building. So what happened here?
The building increased 120, right?
Building increase 120,000. Very good. I put plus 120,000. Okay, then
Cash minus 32.
cash minus 32. Very good. Minus 32. Lagi.
This one, another one is what? Balance 60 days.
What is it? Payable or receivable?
Payable.
Payable. So if it's not mentioned note, then you put it as an accounts payable.
Okay.
Yeah. How much is that? 32,120. Right, so make sure next class you have your calculator in hand, yeah.
151.
I thought 120
Oh, balance.
balance.
130 minus cash.
88.
Right.
All right, very good.
120 minus 32.
Yeah, 120 minus 32 is 88,000 in the form of accounts payable.
Payable.
Right, good. Hidayat, boleh cakap tak?
Okay, I try.
Okay. D, purchase office furnishing costing 18,000, recording equipment costing 88,400. From music supply, sounds paid 28,000 cash with the balance due in 30 days. All right, what do you have here? Alamak.
It's okay. Wait for a while. Okay, for this one, purchase. Okay, office furniture costing at the asset amounting of 18,000.
Okay. So you put asset, office furniture, 18,000. Okay.
And
Ni ada apa lagi? Recording
oh,
equipment.
okay, recording equipment cost 88,400, I think.
Equipment, how much is that? Sorry, 88,400. 88,400. So what happened? How do you pay that?
So cash reducing to reducing to 28,000.
Reduce by 28,000.
Ah.
Beza tu, reduce to dengan reduce by.
Yeah.
Okay.
Reduce by.
And then the balance
And
in
then
30 days.
30 days increasing in account payable.
Very good. How much?
Increasing, wait, 18, 884.
What's the amount balance?
To 78,400.
Very good. How do you get 78,400? You total is 18,000. All right, is for the furniture, and then equipment is 88,400, and then you pay 28,000. So the balance is 78,400. So very good. Everyone else clear?
Yes.
Okay. So let's have Alia, E.
Yes.
Ah.
So we're gonna add, since it is borrowed from a bank, so we're gonna have cash plus 180,000.
Very good. 180,000. And then?
And then we will have another 180,000 in note payable.
Very good. Plus 100,000 in the form of note payable. How do you know it's not payable? Because it says
It's stated question.
yeah, it's a note payable. All right. And very good. Finally, Nurhani.
Yes, doctor.
Ah.
If I understand correctly, so the company pay for the liability of music supply arising for purchases D, which is the liability accounts payable is 78,400. So the cash minus 78,400.
Okay, very good. And then?
And then accounts payable minus 78,400.
Very good. All right. So now you have all the transaction taken up. So you will be able.
It's 10 o'clock.
So of course, later you see that you're going to open up this account. Then you can see the debit credit side. But today I only want to introduce you how the accounts is reflected in the form of increase and decreases based on the transaction that takes place. All right. So far, how do you find the topic so far? And of course, you have to have the totality here. All right. So, but of course, cash later you have to show is a one figure. All right. And then there's where's the land? Huh? Berapa the land kat sini?
2 times you have written land, no problem.
Right,
Just
just
say
put
this.
it there, right? Okay, what else? I think that's all. So totality, you just compute lah. What is the totality of all your asset and your liability plus honest equity? You should have the same amount. All right. I think that here we have the same amount because we have actually taken up the increase and decreases accordingly. I believe that we have a balance. Yeah. All right. So there is an example of what we have actually done in your chapter 2 today. All right, it's 10:01, so I should look into. Yeah, I know. But then, if we do not finish this chapter 3 today, then we are going to have difficulty. Let's see chapter 3. Yeah, I think that there's not much in chapter 3. Okay, can we continue with chapter 3 for 15 minutes?
Yes, Doc.
I'm just afraid that maybe it's too much.
I don't care.
Ya Allah.
All right, come on, you're master level. You have to push yourself. All right, I'm the one who talks a lot here.
Yeah, I mean, to the confirmation because this is like my first time
Yeah, I
getting to know
understand.
the.
Okay, let me see. Let me see
three.
what we will have here. Okay, let me see. All right, actually, it's just what we have in chapter 2, but it's just that we are going to put that into debit and credit. All right, actually, if we were to continue doing this, all right, actually, it helps you to, because what you did in your chapter 2, all right, now you translate that into a T accounts. All right, so what happened is that what you have done here, all right, so what you have done here, remember just now you have the plus minus here. So what we are going to do is that we're going to open up the cash account here. So let just I show you here, yeah. So what happened is that in chapter 3, you're going to identify, you're going to put this into a journal account. All right, what is it called? It's a journal account. Journal account. All right, I will just give you a brief. I don't go through the slide. Is that okay? All right. So when you have a journal accounts, you have to know that there's a 2 sides of accounts. All right. So journal accounts normally is represented in the T form account. All right. So how do I make a T account? So never mind. If I were to draw a T account, can I draw T? All right, let me see. Okay, so let's see, it's a T account. So that's why it's called T, because it looks like a T. Okay, so this is one account. So for example, I say that this one is a asset. All right, any asset account. What I'm doing now. Oh my God. Oh, so nice. Asset. All right, I just want to put it. So any account, you will have a debit side. All right, so the debit is known as GR and credit is known as a CR. You get it? So on the left side is what we call debit side, and on the credit side, on the right side is what we call a credit. You get that? Okay. So when you have every T account, so the asset will always have a I do not know how do I move away from this, right? So asset will always have a, let me see, will always have a debit entry, debit balance. We call it as a debit, all right? The nature of an asset is always a debit and liabilities is credit. Any idea what would be honest equity? Where's honest equity? Oh, it's here. What would be honest equity? Do you think honest equity, debit or credit?
Credit?
I
Why?
guess it's credit, right?
Credit.
Why credit?
Because it's in credit side of the accounting equation.
Yeah, because remember the equation, you have asset equals to liabilities plus honest equity. So if asset is a debit, on liabilities and honest equity must be on the credit side, right? So what it means is that the nature of the account is, if it's an asset, then it means that if there is an increase, it will be debited. All right. If there is a decrease, then the asset will be credited. So that's what it meant by debit and credit. All right. So we are saying that debit is an asset increase. You are going to debit the account. But if there is a decrease, what you do? You credit the account.
Credit the account. Yeah.
Yeah, so simple, right? For Mansi, but on this side, what I do is that if it's a credit, what we do is that if there's an increase, we're going to credit the account. When there's a decrease, they are going to debit the account. Right? Similarly, for liability, for your honest equity, when there is an increase, right, you are going to credit the accounts. Why you credit increase? Because the nature of the accounts is a credit, right? So when there's an increase, you're going to credit. When there's a decrease, they are going to debit. So let's look at this one. Let me let's just have this. You have a cash account here, all right? If you were to put this into a T accounts, right? So what you have here, all right? How do you know it's a increase or decrease from this?
Increase should be positive and decrease should be negative. Negative
Very
should
good.
be in credit side, and a decrease should be in debit side.
Okay. All right. So if there's an increase, you're going to put on the debit side of the accounts. And if a decrease, minus, you put on the credit side of the accounts. All right. So my question is, all right, based on this cash account, all right, you tell me at the end of the day, how much is my cash balance? Based on the T accounts.
You have to calculate it.
Yes, I want you to put that into a T accounts. Whatever you have here, put into T accounts.
200,000 German. The final balance will be 142,000.
Sorry, hold on. Let me see first. Would you like to share your workings?
Because all the positive means all the credit should be summed. So if you sum it, the total should be, I erased it from my, so 200,000 plus 180,000. Total credit will be 380,000, and total debit will be 380,000.
Okay,
Total debit, and total credit will be 100.
400.
right. So let me just show it here. You mean that this is my T accounts? All right. I will have my first 200,000 here, and then 100,000 here, and then minus 32,000 here, minus 28,000 on the credit side again, and then plus 180,000. Do you do it like this?
Yes, yes.
Right, and then 78,400. 78,400. So how are you going to know what is the balance? All right, you look at the account. It's a cash account. It should have a debit balance. So you look at the debit side. Total debit side is 380,000, isn't it? How do you get the 38,000? 200 plus 180,000. You get 380,000. So 380,000. Command X, command V. All right. So here we also do 380,000. Because debit side must be the same as the credit side. So, but the missing value here must be the missing value here must be the balancing figure. right? So how do you know balance figure? Right, so what you do is that you total up this totality, this 1, 2, 3, 4, you total up everything, 100 plus 32 plus 28 plus 78.4, so total is 238.4 minus by 380, right? So that's the balancing figure. So it should be 14100.
And this,
Do you get the same answer?
Yes, doctor.
yes.
Yeah. So again, right, again, for you have to look at the types of account, whether is it an asset, liabilities, or honest equity, and then put that into the journal entries. All right. So later you see that for every transaction, you do not do, actually, you don't do like what I did just now. Right. What you do is that you put into a journal entries, whether you debit or you credit. Right. For example, just now, for example, if you have these, example, all right, what you do is that for here, for the issued here, what you do is that you are going to debit your cash of how much? 200,000. And then you're going to credit your capital. All right, so this is what we call journal entries. All right, but these journal entries later you put into the T account. So your T accounts will have 2 accounts. How many T accounts you have? How many T accounts that you're going to open up for this?
Right now we will have 2.
Two
One we have
accounts.
for cash, another
One
hand
is
we
the
have for
cash, the
capital.
other one is the capital. So you're going to
Capital,
debit your
yes.
cash account, you're going to credit your capital account. Right? So that's how it works. Do you get that? So rather than having this, all right, this is not the right way of doing it, but I do this exercise to get you understand the transaction increase and decreases. All right. But whenever you have the transaction, you normally have to do this, what we call journal entries. For example, here, what will be the journal entries again? For example, here, you are going to debit your building.
Building, yeah.
How much is it? 310,000. Is it 100,000? Then you debit your land. Right, similarly, 310,000. What else? You pay cash, right? So you credit
Payable account.
cash. Credit cash first 100,000, and then credit your account. Is it not payable or not payable? Not payable, right? Of 310,000. Right, so that's how you translate the increase and decreases just now. Why you credit your cash? Why you credit your cash? 100,000.
Hey,
It was deducted, it paid.
Minus.
But your
It was
cash
deducted.
decreases because when you make payment of cash, so your cash decreases. So cash is an asset. So when there's a decrease, it's a credit. You get it? Why you credit you're not payable?
Because in nature, the payable is the credit account because it's another side of the accounting equation. And we have to credit it because if we credit it, it means that note payable is increasing. And then
You don't have to go very
paying-
far, Hakim. You just say that because there's an
Yeah.
increase in not payable, that's why you credit.
this is why we credit, yeah.
Yeah, because the liability, right? There's
The
an
liability,
increase
it's
in your
liability,
liability
it's
not
increase.
payable, so that's why you credit the accounts. And why you debit your building and land?
Because just we purchase it and then it's in nature, the building and land, both of them are under the assets. So we have to add it. And when we are adding it, we have to debit it.
All right. So in short, what you are saying is that because building and land is asset, there's an increase in your asset,
Assets.
so you debit your accounts.
Of course.
Okay. All right. So that will be your homework for chapter 3. All right. Because you don't want to do it in class. So you have to go through your chapter 3. All right. I have given you what it is actually under chapter 3. So go through your chapter 3 first. And then in the next class, inshallah, we'll do a lot more exercises. Is that okay?
Inshallah.
All right. So thank you for your... Sorry?
Yeah, sorry to interrupt you. If possible, can we have the exercise? I mean, the one that we did,
Mhm.
as also for the videos that we did, the recording on Google Classroom.
Of course, I will share the video and the tutorial that we have just done just now. Okay?
Yes, please. Thank you so much.
All right.
Thank you.
okay.
I need to watch them. I need to watch them more.
Inshallah. All right. So just do, because accounting you have to do a lot of exercises. I won't be able
That's
I
correct.
won't be able to give you a lot of exercises, but because the resources is out there, right? You can just go for net school or online learning. So you will have a lot, all right? Because financial accounting is a general course. All right. So
Inshallah.
so you will have a lot of exposure actually. Yeah. So I think that I'm happy. All right. Don't forget that you also have your attendance form in the Google Classroom. All right. You have to fill out your attendance form every time after the class. Because why? Because I need feedback on what you have learned in the class, and you have to put that in your attendance form. Okay.
Inshallah.
All right, and you can also tell me whether you like the class or not, whether what can be improved or any suggestion. All right, you can just express yourself in the attendance form. Yeah. All right. So I think that's all for today. I think that is a very lively class. All right. Thank you for your participation. I'm happy. If you participate in class also, I also even online, all right, is happy to share the knowledge. Yeah. So I hope that you have benefit something for today. I'll see you inshallah next class, and in the meantime please go through the tutorial question and also the slides, right? And I'll see you again with inshallah next week. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Waalaikumsalam. Thank you,
Assalamualaikum
Dr.
Waalaikumsalam warahmatullah.